Good afternoon. Hi, I'm Menaka, Doshi. You're watching BloombergQuint. Over the next half hour, we're going to take you through all the action on the RBI monetary policy front. It promises to be an eventful afternoon. I have Niraj with me and Vishwanath here as well to take us through all the various moves, markets, RBI's thinking. Ira will be joining us from the RBI, and we've got expert guests joining us. We've got Shubhada and Pawan Kumar Bajaj, both of them joining us in just a bit. But Niraj, let's kick it off with you. Markets look sanguine at this point in time, obviously poised evenly, waiting to see what happens with the policy. The big action, though, is in the currency markets.
You bet. 63.82 or 83, and from a start of 64.10 in today's session itself. So that's a lot of strengthening that the currency markets have done. Equity markets, Minka, I think by and large, the last 5 sessions, the last 10 sessions, I think this has arguably been one of the strongest pre-policy moves on the positive side by the equity markets in the run-up to the policy. Today they are quiet, and rightly so. They should be quiet. You don't know what's happening, and if the currency markets and the bond markets are to be believed, not in a big way, then hey, it could probably turn out to be an ugly afternoon for equity markets as well.
I know. It's surprising that the currency markets are at this point in time either changing their mind about the expectation of a rate cut. Yeah. We've got this graphic up there saying a given. Well, the currency market in the last hour doesn't seem to think it's a given, right?
To be fair, Menaka, there are quite a few points that you need to consider in terms of there's excess liquidity and which the RBI is trying to pull out. There's also the fact that capacity utilization is still low, so there is no private sector investment that is coming in. So these are issues, these are serious issues. So probably a rate cut is maybe not a given as the graphic points out, and probably that's what the markets are factoring in.
All right, we'll come back to you for more expectations, Vishwanath. We've got Pawan Kumar Bajaj, the Managing Director of United Bank of India, joining us. So as we go into the policy, are you surprised by what you're seeing on the currency market front? Are you reading much into that, or do you hold hopes that there still will be a rate cut if you were in that camp to begin with?
See, basically this dollar rupee parity means today morning it opened around 64.10, and right now it is around 63.82. I think it's overdone in the anticipation of this rate cut, and as market is predicting 25 basis rate cut, I think rupee should stabilize around this level.
Wow. Okay, I don't think we were asking you as much about where the rupee will go as we were asking you about what your expectations this afternoon is. Do you believe that a 25 basis point cut is a given?
See, 25 basis, yes, of course, when 75% of the market participants are predicting, and it's a room for there, because whatever this data is there. See, if you take CPI and wholesale price index, all are in the comfort zone of the RBI, and core inflation is also the lowest, means during last 2-3 years. So I think there is a room to cut 25 basis.
What about the outlook ahead? What about the outlook ahead, sir?
I think that again depends on the other US rates and Eurozone rates. If we are seeing that, yes, inflation is within the comfortable zone there itself. So I think after this 25 basis cut, if RBI does, I don't think so immediately it will be there. There will be a long pause, and I think situation will be again reviewed by the end of this calendar year.
I think we're seeing some moves in the bond market, but it's so tough to tell at this point in time because everybody's obviously nervous going into the policy, and I'm not sure you can read this to mean anything in terms of the policy outcome. One of the things we've been talking about since morning, Vishwanath, has been the fact that on the one hand you're making the effort to mop up liquidity through OMOs, and on the other hand you're cutting rates, and to what effect, right? You already brought that up when you're seeing capacity utilization. Do you expect that maybe he might not consider, or they might not consider a rate cut, and might in fact just look at maybe reducing the OMO or doing something on the liquidity front, whereby keeping the system aflush with liquidity at this point in time?
Well, at this point in time, yes, the fact is that there is a lot of liquidity in the system, and the attempt is to take it out. So you're right, as such, that you don't want to confuse the markets. But will they reconsider this whole market expectation of bringing down the interest rates? I think that could possibly work out, because it works out in the way the RBI looks at these numbers. Inflation number has come down, that's a fact, but they have also cut rates up by about 175 basis points over the last year and a half. So what is 25 basis points going to do? Is that really going to move the market or not? We can't say that.
I tell you, Menaka, though, the currency markets are the ones which are extremely volatile. Just about 30 seconds ago, it touched levels of 63.8170 or thereabouts, currently at 63.8250. And from a currency trader's perspective, these are very, very volatile times. And that is something you need to keep in mind. I think the currency markets are probably trying to give the biggest hint as compared to the equity markets, which are completely flat as they would be, or the bond markets as well, which are currently at 6.443. So no great movements there. But the rupee, man, it is pricing in a lot from this policy as well.
All right, I think Shubhada standing by with her eye on the bond market. So Shubhada, you want to quickly run us through what you're seeing on your screen? Like Niraj pointed out, the currency markets are telling us one story.
Absolutely, that's true, correct. Menaka, if you look at the rupee from the last policy on June 7th to today, the rupee is already appreciated by about 1%. In the last few sessions, FIs have also turned buyers now. So ever since the last policy, the rupee has been on a winning streak, and like Niraj just said, the rupee has touched levels of 63.7625 today. That's a 3.5-month low. So if an interest rate cut or repo rate cut does come in, it will be taken negatively for the rupee. So we could see some depreciation coming in because the interest rate differential between the INR and USD, the two currencies, narrows, which is obviously not seen as a positive. So we need to see what's happening. But yes, a lot of volatility as far as the rupee goes. But quite contrary to the trend that we're seeing in the rupee, the bond yields are trading absolutely flat at 6.44%. In fact, today, the entire today's session since morning, it has been trading in a very flattish range. It opened with a slight positive bias and has turned a little negative right now, but nevertheless, not too much movement on an absolute basis. Again, even when it comes to bond yields from the last policy to today, the bond yields have already fallen by about 20 basis points. So again, if 25 basis points repo rate cut does happen, probably it is priced in. We may not see a reaction or sharp reaction when it comes to the bond yields unless we see a big 50 basis points rate cut, which is again, of course, unlikely.
All right, Shubhada, thanks very much. We've got Shubhada Rao, Chief Economist at Yes Bank, joining us. Shubhada, good afternoon. We've all been expecting and talking about a potential rate cut, 25 basis points over the last several days now, if not weeks. And then suddenly in the last 1 hour, the rupee market tells us something else. Are you reading anything into that except for near-term volatility before the policy? Or are you maybe rethinking whether there will be a rate cut or not?
No, I think I stand by a rate cut call of 25 basis points for sure. And in fact, the way the rupee has behaved, it just reiterates my call that a small cut should be supporting, the rupee in terms of arresting the sharp appreciation pressures from the rupee. Because when you cut rates, you are in a way dissuading capital flows. And to that extent, it should help the runaway appreciation pressures that are happening on rupee front. But coming to that, I think last 2 or 3 days, rupee has been trying to test 64 and below levels. And probably the moment it touched 64.05, the technicals seem to suggest that there was a break below 64.
We shouldn't read too much into it at
I
this
would
point.
think, it would
Okay, then
not
let's get to the main
fair.
question, Shubhada. What will they achieve through that 25 basis point cut? It's a question I'm asking you. It's a question I will ask Mr. Bajaj right after you answer it as well.
I think it's not just the 25 basis point rate cut which we are anticipating, but also the language. Now, if they do a 25 basis point rate cut with a hawkish bias, it's a wasted cut. They might as well not do it. If it is 25 basis point rate cut with a neutral stance, it throws open the door slightly for the possibility of a further rate cut. And if it is no rate cut, I would be a bit surprised, because then it's, as we all have been saying, there is a structural element to the current inflation trajectory. And even if I build in the impact of HRA and the reversal of the moment, which is expected in, all these vegetables, etc., we still see an inflation which is going to be below RBI's revised lower trajectory. If RBI, central bank, is an inflation targeting policy or a central bank, then I think they would be paying, hopefully, due attention to the inflation trajectory, not just the headline CPI, but also the core inflation, which has been trending lower. So I think the inflation story is the biggest story. And to my mind, the last policy, when they significantly cut the inflation forecast for the first half and the second half, to me, that was in a way a precursor perhaps to a rate action. Of course, that time we did not have the monsoon, performance, and other factors like what's happening globally. But I think it just reiterates the position that, the cutting of inflation forecast in the previous policy should logically extend to a rate cut today. What will it achieve? I think 25 and additional, a likelihood of 25, perhaps that would, support the market sentiment. But if it is 25 with, an indication that nothing is going to happen from here on,
wasted.
To me, it's a wasted rate cut then.
Okay. Are you going to ask Mr. Bajaj the big question on whether this will effectively mean lower rates, given what we've seen happen to savings rates as well over the last week, for savers, for borrowers?
Mr. Bajaj, you want to come in on that very quickly? 2 minutes to the policy release statement.
Yeah. If 25 basis cut would be there, definitely means we can think of further reducing our MCLR by whatever 15 to 20 basis point over a period of time. And of course, saving rate cut, we means after policy cut, we will have the ALCO meeting and we are just seeing the market, other banks' reaction, then definitely yes, something will be there also.
Well, as yet, now the other banks have not yet reacted to what SBI has done. Sorry, Shubhada, you wanted to come in there quickly?
I wanted to add that in addition to rates, it's going to be very important to see the liquidity stance also.
Yes,
today, we are on a surplus liquidity of 2.7 trillion. Now, I was listening into your earlier conversation that with an OMO, would a rate cut be a contrarian kind of positioning? I would not think so, because there's a real slosh of liquidity. You have the post-demonetization banking systemic liquidity through deposits. You have government spending which has accelerated, and you've had RBI's currency market intervention.
Yeah, I must tell you, just 30 seconds before the policy, Shubhada, sorry, but the rupees really started to weaken from the levels that it was at 63.81. 8120 to 63.8425. These might be guessing games, but typically just about a minute before the policy statement comes out, the markets tend to give clues, but there is a lot of strengthening that is happening. You just see this bit of a spike here.
So which clue are you picking up, Niraj? The clue from 20 minutes ago, the clue right now, right?
It's difficult to say.
The clue from where it went from 6.4 to 6.38, or the clue from where it went from 6.381 to 6.384?
Hey, I was talking to Ira, and Ira said, what if there is a cut and the stance is changed back as flip-floppy as it sounds to accommodative, and then what it is to the bond markets?
But that's exactly what I think Shubhada's batting for a change in stance altogether.
No, neutral.
Neutral. I'm staying with neutral.
I'm batting for a continuity of stance, which is neutral, which leaves a flexibility in the hands of RBI for either directional move. What I'm trying to say is, OMO, how much? 300 billion, that's it. And April, June, you saw Reserve Bank of India's intervention in the currency market.
Okay, we have the decision. Sorry, I'll have to cut in it, but RBI has cut the repo rates by 25 bips to 6% from 6.25%. So there we have it. Mr.
But
Bajaj,
policy stance remains neutral.
Absolutely.
Okay, so the two key reactions.
As anticipated, I think I would also like to read more on what the balance of risks that RBI is articulating on. Because if it articulates that the risks remain on upside more than downside, then I think the markets would not, react exuberantly. But I think if the central bank remains on neutral, even going forward in terms of the risks remain in balance, then we all know what our own simulations on inflation are, which we could perhaps look at a likelihood of another rate cut down the road.
All right, Mr. Bajaj, let me get a quick first reaction from you. Here are the headlines coming in: a repo rate cut by 25 basis points, a neutral policy stance, 4 members voting in favor of a 25 basis point cut, 1 member voting for a 50 basis point cut, and 1 member voting for a status quo. No change in projection for the current fiscal, and a projection of GVA growth in FY18 maintained at 7.3%. This policy has come in exactly as you expected?
Yeah, I think so. It is as per the market expectation, because very few people were expecting 50 basis point cut. But on the policy stand, it was by all, it was a neutral stance. But it says, means I think further scope of cutting from this level would be very less.
Okay, Niraj, markets, how are they reacting?
The rupee, Menaka, even though I'm an equity market watcher, look at the currency, 63.8875 or thereabouts. So big moves there. The Sensex, while volatility, but that's just a minor thing. I mean, 0.25% lower. So I don't think the equity markets have reacted too much. So leave out the equity markets. The bond markets placid as well, 6.44. So the yields really haven't moved around too much. It's just the rupee which is dancing a bit here and there. I'm just trying to bring out some other things. By the way, Shubhada, just wondering, last policy, if I'm not wrong, barring one member who was batting for a rate cut, everybody else has maintain a status quo. Sure. This time around, there is a drastic change. 4 members, 25 bips. 1 member, 50 bips.
Yeah, Ravindra Dholakia, 50 bips.
Yeah,
Professor
Dholakia was 50 bips.
You know, I'm not terribly surprised because I was looking for a 4-member team out of 6 voting for a rate cut. Now, of course, Professor Dholakia has maintained a more steeper rate cut bias. But, you know, Chetan Ghate, one of the members, had actually acknowledged the lower inflation print and had also indicated that he would be keenly watching the downside surprises in inflation, if there were any, going forward. And well, to him, positively, what came about is the 2 inflation prints, which surprised even the market consensus. So we were of the view that probably, you know, Chetan Ghate would also vote for a rate cut, and probably that's what's happened. And of course, the 2 other members of the Reserve Bank of India, the governor and deputy governor, would have voted for a rate cut of 25. I think Dr. Patra is one who is likely maintained a status quo stance.
So the expectation that if they maintain a neutral stance, that means that the window is still open, not the door. The window is still open for a further cut?
Yes.
You hold by that?
I would hold by that, but I would like to read the fine print, to be honest, because, you know, a lot gets written and not written between the lines.
We have the lady with the fine print.
Yes.
Ira Duggal joining us from the Reserve Bank of India. Ira, you want to quickly fill us in on all the other detail and the fine print of the policy? We have the headline announcements.
Not much of the fine print because we got the policy about 2 minutes before you guys did as well. But I think the main highlight is this. There is a comment in the in paragraph number 18 of the statement where they are saying that the MPC observed that while inflation has fallen to a historic low, a conclusive segregation of transitory and structural factors driving the disinflation is still elusive. The reason I'm pointing out to this is that I don't think the MPC has made the judgment, which some people in the market had, that we have moved into a slightly structurally low inflation period. They are flagging off the possibility of that being the case, but it doesn't look like they have conclusively come to that outcome. The reason that is important is because if they had given a slightly clearer sense of buying into the structural disinflation theory, then perhaps the market could have started to build in further rate cuts. They may still build in some further rate cuts because the statement, at least at very first glance, is not looking excessively hawkish, but they haven't outright gone and said that we are seeing structural disinflationary forces, which could mean that we are on a path towards 4% and then cruising around that 4% level. Beyond that, I think, as you were saying, there has been a split 3 ways this time. So, Michael Patra still staying with the status quo, meaning he's still not convinced about these disinflationary forces. Chetan Ghate, Pami Dua, Viral Acharya, Urjit Patel perhaps just going database saying that, we are at where we are in terms of inflation levels, and so let's do one cut, bring down the real rate as well. And Ravindra Dholakia continuing to hold on to the case for a 50 basis point cut. A quick word in terms of growth. I think they have maintained their growth numbers for the year. The GVA growth numbers are 7.3%. They maintained their inflation projections in line with what they had done last time, so 2.5 to 3.5% in the first half and then moving up in the second half. So no change in that, no change in stance. So the doves in the bond market who were hoping for a rate cut and a change in stance will probably be disappointed. But Shubhada, I think, was expecting pretty much what we have gotten.
Actually, Ira, I think Shubhada is interpreting this to mean the window is still open for a further rate cut. I don't know if you agree with that or not. But before either one of you talk about this, let's get Pawan Kumar Bajaj to give in a comment, and then you can talk to both our guests as well. Mr. Bajaj, do you think this leaves the window open for a further rate cut?
I don't think so, even though it is a neutral stand. But I will go by the other factors also, like I told you earlier also about the US rates and other things. So I think there will be a long pause. Looking into the overall global scenario, I think position can be reviewed further. But at this point of time, I don't think so. It means during this calendar year, other cut could be possible.
Ira? I think she's busy, frantically trying to keep up to speed.
Sorry, I
no,
couldn't
Ida,
so go ahead.
No, just want to know if you want to ask questions to our guests or no, but I need to point out something out here. The currency, I'm stuck on it, I know, but 63.72 from 63.90 when the policy statement was announced to getting to know that the stance has not been changed. That's an 18 bips strengthening of the rupee.
But what is the yield doing? There's a chart which somebody has sent on our email inbox which seems to suggest that the 10-year bond yield has actually moved up.
It has.
If that's the case, then the currency and the yield seem to be moving in different directions. I'm not sure who's interpreting what.
It has moved to 6.47. There has been a move up in the 10-year bond yield. There has been a strengthening of the rupee. Shubhada, you want to interpret this for us?
Yeah, I think let the market settle down. Let's read, all of us read line by line. I think these are very few early minute reactions. Sure. But from what I read from the paragraph 19 is they've acknowledged that all the upside risks that they had perhaps looked at have not materialized, and what they have articulated also is that they would like to see inflation trajectory around 4% on a durable basis. And that's the key what markets are looking to interpret better in terms of how does RBI then take it forward from here on. For this, I think each one has to project and forecast our own inflation simulations and see whether we are looking at a 4% inflation by end March or over the next few months, beyond 12 months. Unfortunately, RBI doesn't say what is durable basis, whether it is 1 year, 2 year, 3 year. But I would still think that given our own inflation simulations, Menaka, I would still think that it is still likely.
Yeah, Ira, before you say anything, let's just point out the Nifty is in fact lower now by 12 points. It has been in the red, it maintains its red position.
Okay, Menaka, no, I'm going to leave you guys to continue the discussion and go back up for the press conference. I want to flag off one line, not linked to inflation, not linked to growth, but could have a bearing on public sector banks. Right towards the end in paragraph 20, they're talking about the fact that the government and the Reserve Bank are working in close coordination to resolve large stressed corporate borrowers and recapitalize public sector banks within the fiscal deficit targets. That is an important statement, because it seems to point to what some of our Delhi reporters have also been saying, that there will be an additional amount of recapitalization over and above that 10,000 crore. What that amount is and in which quarter that will come in is still out there for debate. But the fact that they mentioned that they are in talks to recapitalize public sector banks within the fiscal deficit target shows that some conversation is on. So I'm going to hand it back to you guys, head back for the press conference and let you enjoy the post-policy analysis.
All right, thanks very much for that, Ira. What do you make of the fact, and again, like I said, we're maybe analyzing very minor moves, rather very immediate moves after, but when you have the yield strengthening, the rupee strengthening, and the markets remaining in the red, what do you read into this? Either the fact that they had all baked this 25 basis point cut in, and therefore, there isn't much to read in any of this, or are they reading into the fact that by maintaining the stance that they have and the language that they have in the policy, there is no window for any further rate cuts, and so there's not much to really cheer about. This is a one-off to adjust to the low inflation we've seen in the last few months, and that's it. That's where it closes from here on.
I think the critical point that they've made is, Menaka, that they've said they are going to be watching the data. Now,
all central banks say
all central banks. So that actually boils down to, most of the actions are going to be data dependent. Now, that implies that inflation trajectory needs to be watched. HRA impact, as we said. Of course, I believe they have also flagged off that when states, start introducing HRA, that would add to another 100 basis points to the headline inflation. So that needs to be watched, no doubt. But is it a very clear-cut direction that no rate cut from here on at all, or definitely a rate cut from here on? I think it's too early to just make a quick kind of pronouncement as to this is the end of rate cutting cycle. I would still like to digest this more in terms of what other remarks and commentary they have
and we'll know that in a few minutes from now in the press conference.
Absolutely. But I would think that I would still not rule out a rate cut for sure.
Okay, let's get a check on the health of the economy from Mr. Bajaj. We've discussed rate cuts. There's not much more to say till we hear from the RBI itself, Mr. Bajaj. But what's your take on where we are in the economy right now? We've come, at least this month, for instance, if you look at auto sales numbers, They seem to be showing some fairly good restocking at the dealer level. That seems to suggest that the expectation on demand is good ahead of the festive season. The economy is looking good after a reasonable monsoon as well. Your view of demand and of credit demand out there?
The demand for this auto and other thing, that is okay. But if you see the PMI manufacturing, it is much below the 50 level, 47.9 itself. So on the credit side, overall, yes, retail credit demand is there. But on the industry side, we are not seeing much demand right now. If you see the credit growth of the banking system itself, I think it is the lowest itself, and most of the banks, they are not showing any growth whatsoever. But looking into this rate cut and means future course of the action, I think position will improve when they are looking for this GEVA of more than around 7.3%. I think demand will come in the second half of the financial.
So how are you interpreting the PMI numbers that we saw on the manufacturing front? Again, too much of a temporary GST impact, or do you read more into it?
There can be temporarily this GST influence, but overall for last during this current calendar year itself, we are not seeing much demand or new capacity building up in the core sector or in the on the manufacturing side. So still demand is less, and unless new capacity comes, then only in the market itself, most of the things are happening on the refinancing side, not on the new any greenfield project or thing like that.
All right, Vishwanath, you have a question for Mr. Bajaj?
Mr. Bajaj, I just want to understand, firstly this rate cut as well as how the RBI is viewing this NPA issue and them getting involved. What do you think, what kind of bearing would this have? Because if you remember in the June policy, Viralacharya had pointed out the point about evergreening of loans. Do you think that something can come out of this? You can have a better resolution with lower rates probably?
I think that is the main issue. But if you see particularly on the major accounts, whatever they have taken and accounts which are in the pipeline, mainly those are the consortium accounts. And I think with the more haircut, some resolution should take place. And if that is the case, I think overall position of the banking system will improve, particularly on the NPA front and on the recovery aspect also.
This could also probably help with the economy and
Definitely.
Shubhada, how did you look at the PMI numbers?
I think it is disrupted in the near term, which we all were anticipating.
But you're attributing most of it to the GST impact?
I would think that manufacturing cycle has had its series of disruptions. First was the 2-quarter impact post the demonetization. Once that settled, you had, for auto for instance, it was the emission norms. Subsequently, you've had the GST. So I think the manufacturing or the production cycles have had many disruptions. So our own expectation was that first 2 quarters of the current fiscal year will reflect somewhat these uncertainties around the decisions. Probably second half is where we see the, a greater clarity and some settling in of the system. So I would not, get completely disheartened by a 47.9 PMI manufacturing. We still need to await the PMI services, for instance.
Correct, yeah.
But in totality, I think these were more or less anticipated that these are going to be disruptive months.
Okay, Mr. Bajaj, Urjit Patel will be taking questions anytime now from journalists. If you had the opportunity to ask him a question, what would it be?
Mainly, again, I will be asking from the banking point of view, on the resolution front.
No, but what specifically about resolution do you want to know about, sir?
Particularly on this about the new list and how much more is coming during the current financial year.
Okay, fair enough. Do we have the press conference on already or any moment now?
Right here.
All right, there. Let's cut across to Urjit Patel then.
Trajectory with respect to the June 2017 statement. This trajectory now incorporates the first round impact of the implementation of the house rent allowance award of the 7th CPC by the central government. Excluding the HRA impact, which will affect the CPI cumulatively, headline inflation would be a little above 4% by Q4, as against 4.5% inclusive of the HRA in the June statement. Another important development noted by the MPC is that inflation excluding food and fuel, which has hitherto been sticky, has fallen significantly over the past 3 months. These factors, along with the normal and well-distributed rainfall and the smooth rollout of the GST, opened up some space for monetary policy accommodation. Accordingly, the MPC decided by a vote of 4-2 to reduce the policy rate by 25 basis points. Recognizing, however, that inflation is expected to rise from the current lows over the rest of the year, the committee persevered with a neutral stance. With several factors contributing to uncertainty around the baseline inflation path, implementation of farm loan waivers, the after effects of the GST, the timing of implementation of salary and allowance revisions by the state governments, the MPC emphasized its commitment to keeping headline inflation close to 4% on a durable basis. While retaining the projection of real GVA growth for 2017-18 of 7.3%, same as the June 2017 forecast, the MPC noted that while the outlook for agriculture appears robust, underlying growth impulses in industry and services may be weakening slightly. Given corporate deleveraging and the retrenchment of investment demand. In this context, it was of the view that there is an urgent need to reinvigorate private investment, remove infrastructure bottlenecks, and provide a major thrust to the affordable housing program of the government. The government and the Reserve Bank are working in close coordination to resolve large stressed corporate borrowers and recapitalize public sector banks within the fiscal deficit target. Eventually, these efforts should help restart credit flows to productive sectors as demand revives. I'll now request Dr. Acharya to say a few words and then Mr. Vishwanathan.
Thank you, Governor. Good afternoon, everyone. As we've mentioned in the past and as Governor has just underscored, addressing the twin balance sheet problem remains the Reserve Bank's top priority at the moment. Investment slowdown in our assessment is significantly rooted in the resulting debt overhang problem from this twin balance sheet issues. With the cleanup on banks' NPAs currently underway, we are striving to meet in near future an important prerequisite for effective transmission of monetary policy, namely robust health of balance sheets in the financial and the real sectors. In order to supplement these efforts, let me mention 3 developmental steps that the RBI will be undertaking to improve financial intermediation in the economy going forward. 1, we'll be releasing in coming weeks the final guidelines for tri-party repo, which we hope will pave the way for a vibrant corporate bond borrowing and lending market, providing better liquidity and price discovery, reducing market cost of capital, and allowing access to non-bank finance for a greater number of borrowers in the economy. A thriving corporate bond market would in itself improve monetary policy transmission by creating a direct impact of interest rate changes on a bigger part of the real sector in the economy. Second, to improve transparency in credit markets and to facilitate better early intervention as well as risk-based counter-cyclical provisioning, the Reserve Bank has decided to put in place a high-level task force comprising experts and relevant stakeholders. This task force will evaluate the existing public and private infrastructure for credit information, assess any data gaps, study the best international practices, and provide a roadmap for the development of a comprehensive near real-time public credit registry for India. Let me stress that the objective is to improve not just the credit assessment by financial lenders, but also of the financial lenders themselves. Third, the experience with the marginal cost of funds-based lending rate or MCLR system introduced in April 16 for improving monetary transmission has not been entirely satisfactory, even though it has been an advance over the earlier base rate system. We have constituted an internal study group across several clusters to study the various aspects of this MCLR system and to explore whether linking of the bank lending rates could be made direct to market-determined benchmarks going forward. The group will submit the report by September 24th, 2017. One last point, the currency in circulation is showing early signs of normalization. There remains, however, much surplus liquidity in the system that the Reserve Bank has been managing. We remain in touch with the government to make our toolkit for this task more complete. In the meantime, we will continue with surplus liquidity management using instruments indicated in the April policy. Thank you.
Mr. Vishwanath.
I'll begin with the point which Dr. Acharya referred to on the credit registry. We have been taking progressively measures to improve the effectiveness of the credit information that is filed with the credit information companies. And these reforms started with requiring all the banks to report all the data to all the CIs, so that there is no fragmentation. Subsequently, we wanted them to dovetail the SHG data into the credit information companies. And now we are making it mandatory for the CICs to issue what is such a comprehensive credit information report, because they used to carry the reports in various subsets in the form of what do you call industry, personnel, MFI, and things like that. And they used to only give information based on the particular area from where the demand is coming. Now we're seeing, irrespective of where the information is being sought by, the comprehensive report covering all the bureaus in which the information is kept should be provided to the credit information seekers, so that the quality of credit assessment becomes better. The second, of course, is again, Dr. Acharya referred to the improvements that we're looking at the MCLR and what to do going forward. But when we introduced the MCLR, we are also allowed the banks that were the existing borrowers are under the floating rate and the base rate system, they could move to the MCLR on a mutually acceptable terms. But we find that the base rate is relatively more rigid. So we need to look at, because quite a few borrowers are still under the base rate system, so the monetary transmission is to that extent impacted. So we will look at how we need to how we can make the base rate a lot more responsive to changes in the cost of funds of banks, and that's something that we'll be exploring very shortly, and we'll have discussions with the banks on this issue going forward. On the NPA front, as we know, we have taken substantive action after the Banking Regulation Amendment Ordinance was passed. As indicated in the press release of June 13, 2017, we have, on the basis of recommendations of RBI, Internal Advisory Committee, directed banks to refer 12 cases for resolution in the IBC. All these 12 cases were referred by the banks to the IBC, under IBC, and they are in the various stages in the NCLCs of the respective NCLTs, the respective benches. Of course, dealing with the stress test is an ongoing process, and we're working on the next steps in this direction.
Okay. Thank you very much. Take a few questions now. Hindu Business Line. Use the mic, please. Thank you.
On the one hand, there is a liquidity overhang in the system. Yeah. So, do you think there was a need at all for you to cut the rates, and when you also have a situation where inflation could rise down the line, actually? Yeah.
Well, you know, we have been facing the challenge of liquidity overhang for some time, and we are managing that. We are keeping the weighted average call rate within the policy corridor. Reducing the width of that corridor is something that was part of that toolkit. And while our statement acknowledges that from the current lows, inflation is likely to rise, it is going to be about 4% by Q4. And given the factors that we have pointed out, that inflation excluding food and fuel has fallen significantly over the past 3 months. Once we exclude the impact of the HRA, which is one source of uncertainty, HRA from the central government side has now been taken care of, and including that in the projection still brings us close to 4%. And we had said that this was a statistical exercise, and therefore it's right for us to net that out. I think what we have done is taken a a calibrated policy decision based on the outturns and our projections going forward. And we felt that a 25 basis point cut while keeping the stance neutral was something that we should be doing at this juncture. Mint.
Sir, hi, this is Alik from Mint newspaper. Was a rate cut in October under discussion in the MPC? Because by then you would have got 2 more inflation prints, a GDP data, and a clearer picture on surplus liquidity in the banking system. Also, you are now taking measures to improve MCLR transmission. So why not October? Why September? Sorry.
That's a good question. You know, the data flow is, of course, these days continuous, and we did have the GDP numbers that were released a couple of months back. We also had 2 more data points regarding the inflation print itself, and encompassing the development since June, the normal monsoon, the smooth rollout of the GST, the inflation excluding food and fuel coming down. We thought that this was an opportune time to do a 25 basis point cut. Govardhan?
Good afternoon, Govardhan from the Economic Times. You mentioned about several factors contributing to uncertainty around this baseline inflation trajectory. Put this in the context of what Dr. Acharya mentioned in the minutes in the last meeting about a higher interest rate. So that appears to be called for a bigger buffer. So what is the kind of a buffer from now? Is it not 1.25 to 1.7, something bigger? So what is that you would be comfortable with, the positive real rates?
I think we are, so one, I would say we are looking at the real rate as one of the drivers into the decision making. It's not the sole component. And you know, it's best to look at the real rate more when you think things are steady rather than when things are actually have gone through a fair bit of uncertainty as we have over the last year. Nevertheless, I think if you take the 6% rate and you take our projected rate of slightly over 4%, I think we are talking about something maybe slightly in excess of the range that you are talking about. My own view, as I had stressed in the minutes last time, was that this is all right in a time when transmission is actually not necessarily guaranteed to work as well, given the structural issues of debt overhang that I have been flagging. So I think we are just slightly outside of the range of 1.75%, and we are comfortable with that.
Hindu?
Now, we have seen recently SBI. We have seen SBI has cut the savings bank rate. So clearly they are indicating that their margins are under pressure. So with this rate cut, do you expect really banks to transmit bank to follow you by cutting lending rates further?
You know, the way to look at the transmission is to determine what has been the case since we started the easing cycle. And there are 2 or 3 things that are clear. One, that on new lending, the transmission has been much stronger, especially in those segments where there is a lot of competition. So, you know, housing loans and personal loans, where the NBFCs also play a big part. Secondly, on the part of the loan portfolio that is tied up with on account of base rate and liabilities of a longer nature, the transmission has been slower. Given the liquidity conditions prevailing and that we have reduced policy rates by a substantial amount since the easing cycle started, I think there is scope for banks to reduce lending for those segments that so far they have not yet benefited to the full extent of our policy rate cuts. Cogensis.
Thank you, sir. Bijoy from Cogensis here. So this is effectively a 5-1 vote in favor of easing. It's not a 4-2. There is a lack of sync between the RBI members voting itself. from February when there was a stance change to eventually having to cut your CPI inflation projections and having a 5-1 vote in favor of a status quo last time. This is the 5-1 vote in favor of an easing. It's a sharp movement in the last 6 months. Do you think it shows that there is certain amount of dissonance and there are too many factors that are moving, which means that different people have different views even within the RBI?
Well, firstly, there is a reason why we put out the minutes so that the individual members can give their specific reasons for their vote decision, and possibly to explain why they changed their minds from June. I think the resolution itself, on balance, very comfortably shows why we went for a 25 basis point cut compared to the status quo in June. We have had more data points, some uncertainty has been resolved, and the substantial reduction in inflation excluding food and fuel. So I think it's all explained. BloombergQuint.
Hi, sir. Ira from BloombergQuint. Question on in para 19, you talk about the fact that upside risk to inflation have either reduced or not materialized. And then you say you expect to maintain that projection of 4% by the end of Q4. Why did you not change your stance while cutting rates? And also, if you stay on this path towards 4%, should one assume that this is the extent of accommodation you think was possible? Only if we start to see further deceleration in inflation or quicker disinflation could we see further room open up for rate cuts?
Well, let me refer to paragraph 19, where we make it clear why we are sticking to the neutral stance. That given that the trajectory of inflation is expected to rise from the current lows, that is the main reason why we have been cautious enough to stick to the neutral stance, and therefore, there is nothing to explain in terms of why we have not changed the stance. The stance is exactly where it should be and what it was in June, and therefore I think it was the right call to make by a majority of 4-2. CNBC आवाज.
सर, जैसे कि डॉक्टर आचार्य ने कहा कि जो ट्रांसमिशन है वो एनपीए रेजोल्यूशन पे काफ़ी हद तक डिपेंड करता है. एक दौर में हमने 12 कंपनियों के सामने कार्यवाही शुरू होती हुई देखी है. क्या आगे कुछ और सिलेक्शन आप करेंगे, कुछ और नाम आप चुनेंगे उन कंपनियों का जिनसे रिकवरी की कार्यवाही बैंकों को प्रायोरिटी पे करनी चाहिए?
I request Mr. Vishwanathan.
I think I'll reply in English. I think I've stated in my opening statement that dealing with the stressed assets is an ongoing issue, and we are working on the next steps. And I think that answers your question. We're working on the next steps.
That's one question at a time, please. Lata?
So on liquidity, I mean, by when we have been, although we have a neutral policy, we have had a fairly accommodative liquidity. By when do you think that will be drained, if you can give a timetable? And because of this liquidity, do you worry that yields in some places have really fallen? Don't you worry about the credit quality of some NBFCs, some mutual funds, some CP yields have fallen to 6%? Is there a worry at all?
Yeah, I think this is a good question. We are certainly examining this very closely. I would make 3 points. One, we were clearly remonetizing, and we had to wait and assess when we think the system is actually reaching a stable level of currency in circulation. Like, one way I think something is stable when it bounces around its level. And I think it's only recently that this has started happening. Otherwise, we've just been remonetizing at an increasing pace, and currency in circulation has been going up. So one, we had to give ourselves a certain amount of time to know whether the system is actually getting the currency that it requires. Two, having said that, as you know, we have been mopping up a lot of liquidity on 7, 14-day and 28-day variable rate reverse repos. We've also started conducting open market operations at a fairly, I would say, gradual pace of reasonable amounts. Our intent is not to actually destabilize or shock the markets in any way. Third, we will continue watching the currency in circulation numbers closely to get a sense of whether we are at now the right level. And if yes, that will give us a sense of assuming reasonable growth numbers where we might currency demand to be in, say, 6 months, 9 months, or 12 months time, and that will lead to our calibration of the liquidity, of the more durable liquidity operations like open market operations that we might have to do.
So credit quality, sir.
I think one question at a time. And BBC?
Thanks a lot, Governor. So you have mentioned over here in the 20th paragraph that the government needs to take steps to look at private investment, remove infrastructure bottlenecks, and if you even look at the recent data that's come out, whether it's industrial production, factory output, that has weakened. How big a concern is that, and how much did that really play a role in influencing this decision to go for a rate cut?
I think we have mentioned that we could have a stronger growth performance if some of these things are taken forward. In particular, removing infrastructure bottlenecks, finding measures to reinvigorate private investment, and provide a thrust to the affordable housing initiative of the government, which has the potential for very strong multiplier effects. And I think a fair number of pieces of the jigsaw in that context are already in place. There is one that we have, we are aware of, and which according to several stakeholders is coming in the way for speedier implementation, is the clearance of these projects on affordable housing at the state government level. I think we need a time-bound single window clearance if this very important initiative, which has the potential for very strong growth impulses going forward, to come into place. So, okay, that's it. Thank you.
All right, so that was Governor Urjit Patel and his colleagues addressing the press right after the RBI monetary policy announcement. Niraj, a quick look at what's going on with the markets right now?
Nothing, Menaka. In fact, they've recovered all the lost ground as well, so maybe the commentary is heartening. Not dovish, not hawkish. Status quo is what they pretty much
But no dramatic moves on either the rupee or the bond market or in the equity markets,
pretty much
right?
Status quo.
Okay. What did you take away, Shubhada, from this? Besides the information we already had from the policy point of view, key things that you took away?
I think key factor that the governor did articulate in the press conference is that there are uncertainties in terms of, a flare-up in demand because of, the compensation to the farmers, etc. And the HR impact of states also having some kind of a flare-up chances in demand. But early days yet to make a pronouncement. I think the markets will digest. So too soon to make a pronouncement that this is it, no more rate cuts, or that there is huge room for rate cuts. On balance, I would say that it's even for us, it's a wait and watch for inflation, because we would like to see before the next policy how much of downside or upside surprise do we see in our own inflation simulations. But I would think that it could go either way, and that is why maintaining a neutral stance has been, in my opinion, an appropriate action at this juncture.
Yeah, you pointed out something while the press conference was going on, Shubhada, in terms of where we are in inflation right now and RBI's reading of that and how you're interpreting that. You want to fill in our audience on this?
Yeah, sure. In fact, in the June policy, RBI had said that the first half would be 2 to 3.5, and second half was 3.5, 4.5. What we see at this point is RBI is very clearly sticking the fan chart more towards the upper end of the band, which is at 4.5. So which actually incorporates the risks that they have been talking about in terms of the demand and growth multiplier having their impact on the pricing powers returning into the economy.
Okay. You heard, you heard both Governor Patel and his colleagues, especially Deputy Governor Viralacharya, address the issue of the plentiful liquidity we've seen in the system.
Absolutely.
I did not read into that any change in the RBI's current position. Did you, in any fashion?
No, I think it would be more of a continuity of what RBI had said in its April policy, that they would, utilize all the tools available to them at this juncture, which would be reverse repo, which could be OMOs. They recently saw the MSS ceiling being hiked from $1 trillion trillion to 2.5 trillion because the ceiling has been exhausted. So I think they'll keep all possible options. Surprisingly, we did not hear anything on SDF. Another possible tool that they could have looked at is perhaps cash management bills. But once again, they'll have to segregate the durable liquidity and the transient liquidity. When I say transient liquidity, they'll have to see how much of government spending gets normalized. And durable liquidity, of course, what is the RBI stance in terms of absorbing the dollar liquidity in the system, and thereby, you know, it injects rupee liquidity, and how they plan to mop it up.
Okay, I know you got to run. You got a lot of data crunching to do. I have one last question. You may have answered this in parts already, but when ERA put the question to Governor Patel on why did you maintain the stance that you did, he reiterated what he's written in the policy, which is that we do see the trajectory of inflation moving upwards from here on, right? So this is it. This is the last cut for how long, according to you?
I would still think that it could go either way. For the simple reason, from here on, nobody believes that 1.5 is a durable inflation number. We all obviously think that this is the lowest point in the trough, and we are going to see an upside as far as inflation is concerned from here on. The question is, how much of upside, how much of intensity in that upside? What are the probabilities of oil going to 60, driving the domestic fuel prices up? What is the probability of crop failures and food inflation across board going up? And what is the probability of a sudden sharp demand flare-up, closing the output gap, and therefore pricing power translating into high core inflation momentum? I think all these probabilities would be each one's assessment. In our own assessment, I think these stand at a lower probability, and that's why I would not rule out a rate cut at this juncture.
What period of time are you talking about?
I think this fiscal year.
This fiscal year?
Yes, yes.
25 bips, under 25 bips this fiscal year.
Cannot rule out.
All right, Shubhada, thank you so much for joining us. Niraj, any last comments?
No, I mean, just that, Menaka. I think all of it sums up in the para 19 that they've written, that they're saying that because the trajectory of inflation in the baseline projection expected to rise, the MPC decided to keep the stance neutral and wait for incoming data. I think that probably sums up everything.
Yeah, so they cut rates, they maintained the stance at neutral, suggesting to you that maybe they could consider another rate cut, but they dashed that expectation by saying we expect the trajectory of inflation to move upwards, and thereby, like all other good central banks, leaving you no less, you know, sort of clearer on what could the next position be. But like Shubhada said, maybe the window is slightly open. With that, we're going to wrap it up here with our special coverage of the monetary policy on BloombergQuint. Thanks for watching. Stay tuned, because we'll have lots more coming up later this evening, where ERA will be talking to bankers and economists on what to make of today's monetary policy announcement, and make sure you tune in to BloombergQuint.com for all the details.